Well, hello, my name is Brett Hirsch. I'm an instructor for overnightaccount.com, and I'm also the owner of realestatetaxpros.com, and I'd like to introduce you to a little video series that we've created entitled How Congress is Killing the Tax Profession. Now, this isn't a joke, this is very serious. I am a very humorous individual, but this is some serious stuff, and I'm kind of sarcastic, but this is the real deal. Our video series is going to be in 3 parts. You are now in part 1. Part 1, that is this part, How Congress is Killing the Tax Profession. How about that? The title of this lesson is the same as our series. That's pretty cool. What about part number 2? The impact that this is having on the profession itself. If you're a tax professional, say you're a CPA or an enrolled agent, or somebody's an expert, maybe you're a tax attorney, you're going to be nodding your head through this thing and say, yes, that is what I am dealing with. It is killing the tax profession. It is also impacting you if you're a consumer, which leads us to how you can help. How you can help, especially with understanding what's happening in the industry, maybe have a little more patience for what we're going through, and also realize that it is impacting you as well, and your tax dollars may not be handled as efficiently and effectively as you might like. So let's move forward to part 1, How Congress is Killing the Tax Profession. That is this part. We have a few discussion points here. We're going to have part A, Congress makes the rules. Part B, Form 1040 is no longer about taxes. And then part C, mind-bending, mind-numbing, mind-exploding, mind-blowing, constantly changing complexity that is now your tax return. And that's what professionals are responsible for. So let's discuss Congress. IRS does not make the rules. I will repeat that in a few minutes. Congress makes the rules. You know what else that means? Who elects Congress? I do. You do. So you also make the rules indirectly because you elect the officials who make the rules. We elect them, as I said, we elect the creators of our taxes. We elect the individuals who determine every tax rate we pay. We elect officials who determine every penalty that we pay. We elect officials who write every loophole that gets certain special interest groups or certain individuals out of the taxes that we elect them to create. And they also determine every deadline. Every aspect of taxation is created by Congress. It's important that we understand that, not the IRS. They're just largely a scapegoat. What you also understand is that lobbyists also help, to a great deal, create the taxes that you pay. These are the individuals, special interest groups you might say, that donate to our members of Congress. And when they donate to our members of Congress, they want special favors for the most part. They influence to a large extent, and they literally write to a large extent much of our tax code. That's these individuals. And they represent generally, let's say, corporate, financial, social, certain interests that may or may not be related to your best interests. But lobbyists write a lot of the tax code. The IRS does not make the rules. Congress does. The Treasury Department, or the IRS, their job is to interpret and enforce the tax code as it is written. So that stuff that makes no sense, that no one understands, their job is to make some sort of sense of it and enforce the rules that Congress imposes. They have to do everything that deals with that. They write the regulations telling us how to apply the law. Regulations generally come out good time after the laws are written because they have to figure out how they're going to apply it in the real world. And a lot of stuff that's in the tax code is not really applicable easily to the real world and efficiency and effectiveness in collecting taxes, let's say, funding the government, which is supposed to be the purpose of taxes. It's not anymore. All right, they create the forms. They got to take this tax code and create the forms that have to be completed to collect the taxes that Congress tells us to do, tells us to pay, I should say. They want us to report the items that are required by law. They create the forms, which is not a very easy thing to do. They do all the electronic stuff. They bring everything into their system. They process tax returns. They are a victim. Let me say that again. The IRS is a victim of the people we elect. They are not the bad guy. They are in charge of enforcing the rules. They're used as a scapegoat a lot, and I'm not a big fan of the IRS, but I understand where they're coming from. I teach a lot of people that work for the IRS, retired individuals that work for the IRS. I know a lot of people that work for the IRS. They're in the same boat we professionals are in. So remember, Congress makes the rules. Let's move forward to Part B. Your tax return, that form that you file every year, it is no longer about collecting taxes. It has many uses. It still collects taxes, but its primary function is no longer about collecting taxes. A few years ago, let's say a few decades ago, quite a few decades ago was when it started, Congress discovered something really cool to them, really important. They said, hey, you know, there's this form that everybody has to file every year. And you know what else? They got to file it under perjury. They got to sign that thing under penalty of perjury that return is correct. So that might make that form useful for a variety of purposes. And that's exactly what they did. They decided to use it for a large variety, a growing variety, an exploding variety of social and economic programs that they wanted to run through that piece of paper, multiple pieces of paper, that each of us has to file every year as citizens or residents of the United States. They can now track the financial activities of citizens using this form. They can fulfill the wishes of those lobbyists and special interests I mentioned a few moments ago. They can replace entire gigantic bureaucracies. This form can replace it. They can replace it by using your Form 1040, and they say, save the taxpayers money. Not really what happens, but they say, because we can reduce all this bureaucracy by throwing everything into the tax return, we don't have to have all these different agencies. Well, you know what? They still got them, don't they? They still got them. And then, in the early 2000s, 20-ish years ago, 15 years ago, depending on, it was adopted over time. Electronic filing made it very easy to run these programs through Form 1040 because it made it very efficient and effective. We e-file the forms, they go right in the system, and they're processed within the IRS system. And you know what else? They can change it anytime they want. And they now do it on a really regular basis. So there you go. The result, as I said earlier, the primary function of your tax return is no longer about collecting taxes. What's its new function? I've alluded to it. Welfare distribution. We administrate social assistance programs, a variety of them. We actually facilitate health care. Where do you think those ACA credits come from for health care? Ran through your tax return. Tax professionals are responsible for that. We distribute manufacturer rebates. What do you think most of the credits are for buying something? It's really a manufacturer rebate that taxpayers pay for so that, to help certain industries out, or shall I say lobbyists and special interests. They can also track the foreign activities of our residents or our citizens, and we can use the tax return to make them swear under perjury about their different types of investments. So you can call that investment surveillance. We can have individuals of business also swear to certain things under penalty of perjury that they have done or maybe they did not do on that form. We can provide employment incentives for a variety of special groups. And that's not a bad thing, but all this is now ran through Form 1040. We can subsidize higher education through Form 1040. We can administrate environmental and energy policy of the United States through the tax return. We can stimulate capital investment through a variety of programs for special industries that are ran through the tax return. We can encourage investment in select industries and countries, all with the help of our Form 1040. And what has this caused? On the Part C or Part 3 of this particular lesson, or part of our video series, mind-bending complexity, mind-blowing complexity, whatever you want to call it, that's where we're at with our Form 1040. 1040, as I said earlier, it replaces several gigantic government bureaucracies, not including the IRS. If they would have to run all these social programs, a lot of them probably wouldn't exist. But because of Form 1040, they can run entire bureaucracies, administrative state, as you might want to say, through Form 1040. Your tax return, any given tax return can include one or more, often it's quite a few, special of 40, up to 40, there's actually more than 40, special deductions and credits related to the issues I mentioned earlier. Here's some of the issues we deal with every day in the tax profession. A lot of them deal with welfare and social assistance. You got the Earned Income Credit. You know what it does? It was created in 1975 as a temporary program to help get people off welfare. Well, that didn't work out too good. You know what it became? It now distributes over $65 billion to over 26 million citizens or residents, mainly citizens, not necessarily, residents of the United States every year through your tax return. You get dependent care credit, the social assistance. It reimburses parents for daycare. Now I have an economics degree too, and I might want to tell you that when you subsidize something and regulate it, the more you regulate it, the more you subsidize it, the more you push prices up. So that's nice. Medicare waiver programs, it helps a lot of individuals, and it's a good program. These are not bad, but they all run through your 1040. Helps parents raise their children or other individuals that they are related to in their households who are disabled. So you're actually through the Medicare waiver programs, ran through the tax return, they actually are paid through the state or through special programs, tax-free. We reconcile on the tax return for taking care of usually their own dependent children. That's a good thing. Still runs through the tax return. Child tax credit. Your tax return reimburses parents and others for the cost of raising their children. Retirement credit. Your tax return helps certain individuals save for retirement, generally lower income individuals. It helps individuals who want to be parents, it helps them with adoptions, financial assistance through adoptions. Tax return is even responsible for health insurance credits or health insurance. Your tax professional is now responsible for the health insurance, to a large extent, for over 15.9 million individuals who receive assistance through Form 1040. What a special program that tax professionals are now responsible for. Then you got education assistance. You got the American Opportunities Credit, Lifetime Learning Credit, student loan interest deduction, grant programs, taxable and non-taxable scholarships that are ran through the tax return or related to the tax return. Then you got your 529 plans and qualified savings plans, all part of the tax code. Isn't that nice? Here's a few other credits deductions that are ran through your tax return. Mind-bending complexity. Various retirement deductions, all these adjustments to the AGI. You got your clean vehicle rebates, you got your home improvement rebates, you got your bonus depreciation, your Section 179 expense, you got self-employment health insurance ran through the tax return as a deduction, you got your solar and wind power credits, not just for individuals, mind you, but also for different industries. Very, very lucrative for many individuals and industries. You got your qualified business income deduction, which is actually a good thing, now it's complex. Biggest middle class tax deduction ever. It goes away in 2025. Numerous credits for hiring veterans, felons, underprivileged groups. You got research and development credits, etc., etc., etc. So here's the thing. Here's the thing that's all this is leading to. Each credit deduction I've mentioned, and that's only a few of them, has very complex rules about who qualifies, who doesn't qualify, income levels, all of this stuff, many, many requirements for each of those credits I mentioned before. And here's the thing, it gets much worse. Congress constantly changes these rules. 15, 20 years ago, you may have major tax legislation every decade. 7, 8 years, you might have something happen. Every decade, 2 decades, they might rewrite much of the tax code. This happens every single year or every other year now. Every 2 to 3 years, we have major tax changes. We just had 2 this past year, and this is 2023. 2023 is not over yet, but we've already had 2. Well, one was late last year, and one was the beginning of this year. Still, IRA Secure Act 2.0. Very crazy stuff. And here's the worst part. They're often retroactive, meaning this 2024 is election year. Probably won't see a lot then. After 2025, after the election, you're probably going to see some major tax legislation. And you know what? There's a good chance large portions of it will be retroactive, meaning it will actually impact the year before, meaning professionals have to learn it after the fact. IRS has to reprogram all its computers after the fact, and it's just crazy. So that's the end of part 1, how Congress is killing the tax profession. Part 2 will share the impact it's having on the tax profession. Thank you so much. Again, I'm Brett Hirsch, aka My Tax Guy, bringing you the happy news.